Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, February 25th, 2021. And here are our top stories. Event-driven hedge fund performance is off to a hot start, and the intersection of hedge funds and ESG. Well, joining me now to discuss this and more is Tucker Piner. He's a hedge fund data specialist with Bloomberg LP. Tucker, great to see you. Thanks so much for joining us on the program this morning.
Thanks for having me, Jeff.
Yeah, and I can tell you're not in London, are you?
Nah, I made the escape. I'm nice and cozy on Barbados right now. I'm going to be living here for quite a bit.
Well, good. I hope you and your friends have fun. It looks beautiful. I can see the sun is shining. Very different probably from the UK and here in the States where we're having a lot of cold weather. But let's jump into it, because last time when we had you on, we talked about hedge fund and alternative performance. And I believe that Bloomberg tracks these numbers on a periodic basis. What can you tell us? How have hedge funds and alternative investments done over the last few months?
Sure thing. So when we first spoke, the process of launching our Bloomberg hedge fund indices, Bloomberg built by the hedge fund performance that my team procures here and in Hong Kong and New York. And now that we've built these 25 hedge fund indices, we're able to track by month, by 3 month, year to date, 1 year performance of the specific strategies that make up the hedge fund industry. So we want to help our investors understand how certain strategies are performing compared to other strategies, whether it be credit, hedge, global macro, relative value, whatever your interest is in the hedge fund space. We wanted to give people sort of a quick snapshot of what's happening within the market. I'm glad we're speaking at this time of year. Obviously, we've now seen a full year of performance really since the pandemic has hit. And some quick takeaways. And I'm seeing funds continue to storm ahead despite the market downturn in the past few days. But the biggest takeaway I wanted to discuss with you is what we're seeing on the event-driven side of things. We're now seeing over the past 3 months, just that event-driven strategy is up 12.5%, significant compared to other hedge fund strategies, and even more intense is the active strategy. So active funds are now performing in that same time period of the last 3 months. They're up 20%, which is super encouraging.
Yeah. So Tucker, just for my understanding and the audience's, event-driven. What does that exactly mean? What events are we talking about here? Is it market events? Is it political events? Is it all of the above?
Yeah, the biggest way to think about it, I think, is it comes around mergers and acquisitions and understanding any sort of activity related to a company and sort of any structure that could change. So you've got, let's say, for example, Carl Icahn recently took a massive position within First Energy. It was, a stake of $920 million. So he's now got percent of free, which is going to be a massive event. Their stock went up 8% just on that announcement. Now let's see what he does next. With an activist fund, he's going to be very active in wanting to influence the board seats. He's going to be very active in some of their influencing their shareholders and how they're going to vote when it comes time for their proxy voting. There's going to be event-driven funds they've got a sophisticated team of people who are understanding once an announcement's made about a potential acquisition, and then understanding what's going to happen after that, whether it fails, whether it goes through, and how that company is going to perform is going to impact the fund performance.
So, okay, well, thanks for that, Tucker. And I would imagine that this all relies on data. Whether you're an event-driven fund or fund of funds, you've got to have a lot of data. How do they source this data? Did they source it from companies like Bloomberg or other, intelligence gathering services?
Definitely. So the main you would see is probably coming from any publicly listed company. We want them to be using Bloomberg. Any sort of event that's going to happen in the private space, a lot of times come from a relationship that firm, say it's a private equity firm or even a hedge fund, is building with them and understanding the fundamental forming, what their projections are for months, years to come would be, what their revenue goals are. So that's sort of a bit inside baseball. They have access to data that even Bloomberg wouldn't have access to. When it comes down to just pure equity analysis, fundamental analysis, Bloomberg is definitely the place to go.
And Tucker, because and I'm assuming that the performance has been very, very good relative to traditional benchmarks. We talked, I think, last time about the S&P 500. Have you seen, or has Bloomberg seen, more deal flows? For example, more inflows into some of these alternative strategies? And if so, what is it? Just event-driven, or have there been other strategies that have made sense for institutional investors?
It's still early to tell about the big allocation trends for 2020. We did it year where we are seeing increased flows into private equity and alternative funds, and that's based a lot into private debt, emerging market strategy, and it's performing super well. Hedge fund index. So we're seeing the performance continue to go up, which is always followed by investor capital. So that's something that we're going to continue to monitor throughout 2021, and we are seeing a bit more of investor demand for some of those more specialty strategies like an activist fund, because you have to think there's so many distressed assets out there. The COVID-19 pandemic has just added so many different industries, but what's going to be interesting for the asset management community is where those pieces get picked up, how those investors and managers turn into profitable businesses, and the people holding them in their portfolio are going to be feeling pretty good about that.
Right, and it makes a lot of sense. If you have a time like we're going through now with a lot of upheaval, a lot of change, companies going out of business, companies merging because of financial reasons, it stands to reason that this is a time to be with an active manager, someone who is actively managing a portfolio, taking in this information. One question I have for you, Tucker, and it might be too early to tell with the Bloomberg data, but what were your thoughts upon hearing about the GameStop debacle issue, however you want to term it? I guess it depends on your point of view. But how did that impact, or how could that impact some of the work that you and the Bloomberg alternative mandates team are doing?
Honestly, for us, we're not going to touch this sort of one-off, exciting headline-grabbing news stories from a database perspective. We understand the importance of working with the sophisticated managers and really those institutional investors who understand value investing and want to continue to help their clients achieve their investment goals. What's particularly exciting, and I had, obviously had friends that were involved, personally within the whole GameStop drama, but I think it's just the testimony last week on Capitol Hill. You've got significant hedge funds about the idea of shorting stocks and squeezing and things like that are very much relevant to my world and to your audience's world, I'm sure. But it's not something that we tend to capture from a database perspective. However, what is being put out by Bloomberg is really interesting ways to track the being said on Reddit. This idea that they want to track certain price movements and price that happens based on certain words that are happening with the platforms. It's definitely something that, as a whole, we'll be monitoring. And it's significant enough that with solutions for our clients, but at the same time, from my point of view, the hedge funds, that's not something that we're going to follow too closely.
Yeah, well, certainly. I mean, if you are utilizing artificial intelligence, neural nets is something we talked about earlier in the week with Ray Wong of Constellation Research Inc. I mean, that can really inform investors and really help make better investment decisions if you kind of know where things are tracking, right? I mean, at the end of the day, it's been the age-old, tried and true method of trying to predict where the market is going to go, and maybe gathering some of that information along with the information you're providing can somehow make people more have a better foresight into what's going to happen in the market.
Well, hey, at Bloomberg, we like to say we speak future, and hopefully we're able to help our clients perform at the highest level.
Yeah. Well, Tucker, I want to take a quick break. When we come back, we'll talk to Tucker about ESG and hedge funds. We've already talked about activist hedge funds, but what does it mean for environmental, social, and governance funds? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Bloomberg's Tucker Piner. Tucker, thanks so much for staying with us this morning.
Great to be here, Jeff. We're doing all topics today. I'm pumped about it.
Yeah, I don't think that you're going to have a lot of complaints being in Barbados right now, but it's great to always talk with you. Let's talk about, you mentioned activists, you mentioned Carl Icahn, you mentioned activists and event-driven funds. Let's talk a little bit about ESG and how are hedge funds and alternatives looking at environmental, social, and governance?
Great question, Jeff. So one thing that you may have seen last month was Larry Fink's letter to CEOs out there throughout the world and all the ones that and companies that are stakeholders of BlackRock. Something that he made pretty much the theme of his entire remarks were how climate risk equals investment risk, but also how climate transition equals investment opportunity. And it's just undeniable that the institutional investor community is following ESG trends and understanding how to build portfolios that meet these certain requirements of sustainability. And the most important thing for those investors is how to make money. And that's really where ESG comes into play. And that's definitely why we're talking about it right now.
Well, and look, when you look at ESG flows over the last year in particular, but over the last, I think, 5 years, I mean, it's just this trajectory that, you wonder if it's truly sustainable at the same rate. So there's clearly more than just a trend here. But I guess my question to you, and how do, as a database, someone who's building a database, how do you incorporate ESG and ESG factors into the data that you're gathering? Because truth be told, with hedge funds, it's not always transparent. We've talked about that, where you don't want to give away the secret sauce or the secret recipe for how you do things.
Yeah. No, definitely. That's going to be always. That's for any information service provider is how can we accurately represent what it truly makes up an ESG fund versus, what somebody's just checking box saying that they follow ESG guidelines. But I think it's going to be our challenge is working with the investor community. They're the ones who are going to drive everything. You mentioned earlier about some of that increased allocation. We've seen net inflows into ESG ETFs increase from 8 billion in 2019 to 31 billion in 2020. So obviously that's a massive increase, a massive demand for these products. BlackRock actually manages half of those ETFs. So they're personally going to be pushing this as part of their agenda. But at the same time, other capital is continuing to follow that. Other managers are under because, again, it's not about necessarily we want to make the world safer, more healthy, or it's always going to come back to making money. And that's what ESG has to prove in the years to come. And it's definitely kind of tracked on par with other indices. But the challenge is going to be the efficacy of those portfolios and of those ETF funds, ESG ETF funds, how they continue to perform. I think they're just going to be listening to their investors. They're going to be able to really achieve and win allocations from investors who believe in their strategies. It's going to be up on the hedge funds to convince them. Wants the hedge fund community to understand how they can market their fund strategies to investors around their ESG principles.
Yeah, Tucker, do you see a difference? I mean, you're originally from North Carolina, but you worked in New York for a period of time from Bloomberg. Now you're in London, forgetting Barbados for a period of time. It's great that you can work remotely there. And you also have an office in Hong Kong. Are you seeing different approaches from based in the U.S. to those in Europe to those in the Asian region of the world?
It's becoming a global issue. We've seen massive commitments from Japan, South Korea. In January, the U.S. just re-entered the Paris Climate Agreement. So nations across the world, it's a priority for the asset managers and the investors that live and manage money. It's definitely something that will continue to be a trend as it becomes a priority for the governments that make up these make up the countries or regions are trading. So I think that's something that we'll continue to monitor at Bloomberg. Obviously, the regulatory environment is massive and something that is going to continue to create challenges, but also opportunities. And that's what I think a lot of these sophisticated funds will tap into and be able to alpha for their clients.
And is ESG, I mean, we're talking about institutional investors, but are we going to see more interest from retail investors? Maybe they're not necessarily high net worth, but people who, who are just have an interest maybe within their 401k plan here in the States or in a comparable plan in the UK or in other parts of the globe. Are we going to see more interest among retail investors so that some of the data that you're gathering will have be of interest to, say, plan fiduciaries who are managing their retirement plans?
Without a doubt, we're already retirement accounts have plenty of ESG focused portfolios make up those plans. And so that's something that's already benefiting them. They're already feeling protected. As we talked earlier, and we've seen last week how quickly climate can disrupt an economy and climate change can disrupt businesses, communities. What's happening in Texas. It's definitely something, the asset management community will monitor. They'll try to protect capital across the board. And I think ESG funds will continue to be a priority, and Bloomberg will continue to make it a priority in our database.
Yeah. Well, Tucker, it's always a pleasure talking with you. Enjoy the trip and the time in Barbados with your friends. And we look forward to having you back on the program again very soon.
Thanks so much. Have a good one.
Well, that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more all in one place, check out today's edition of our newsletter, The Morning Pulse. Don't forget, we're back again tomorrow. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.